Hello and welcome to this week's episode of the Scottish Property Podcast. My name is Stephen Clark and I'm joined as always with Nick Ponte. How are you, Nick?
Hello. Yes, we are back refreshed from our little break over Christmas and New Year. And we've got a great interview today. A guy called Kazeem, Property by Kazy is the brand on Instagram. 50,000 followers on Instagram. This guy's blown up. I mean, he's only been on Instagram for about a year. And you can see why he's blown up because some of his projects are very nice.
Yeah, he's good. Do you know what? This is actually a really, really good interview. And see, if you're young and starting out, I think this is the interview for you because we didn't actually realise until the end of how big his deals were and what he was doing, because he was very humble and a lot of the stuff he was sharing was about his humble beginnings and how he was hustling and building up capital through his entrepreneurial kind of spirit and his businesses on the side. And he worked real hard, but it was very much tipped at younger people and getting started without that educational route, finding value and offering your services to other developers to kind of learn on the job. I thought it was really a really good interview. And he just kept wanting to give more information.
Yeah, so the guy's 31 or something like that. I think he's been in property 8 years. So young people will relate to it. I think he's done like 35 projects, flips. He's like primarily a developer, in and out. Buying at auction, adding value, doing flat conversions, that sort of thing. He goes into, although he's based in London and, he's English based, we try and focus for you guys on the whole, just the kind of mechanics of being a property developer and the mindset and, dealing with builders and finance and all that sort of stuff. So all applies wherever you invest in property. Do you know what I mean? So
yeah, I relate to quite a lot he said as well, and I did relate on to when he was talking about the people will try and push him to do bigger projects and go into new build developments, and it's something that I've had a lot of through the last 3 or 4 years from my journey. But when you look at the profit margins of going in and out in a flip, he was kind of comparing it and saying, well, I can make 60% return on the cash invested and I'm in and out within 6-7 months, whereas you do a new build development and go through planning and permission and building control and all that long process to make 25-30% return. He says that's a longer process and you make less money. So I like quite a lot of what he shared. It's good.
Yeah, so this guy's a real deal, guys. Hope you enjoy the interview. Go and check him out on Instagram. It's Property by Kazy. Here you go.
So welcome, Kazeem of Property by Kazy to the Scottish Property Podcast. Thank you very much for joining us.
Thank you for having me. Appreciate it.
Okay, mate, let's start with the age-old boring question. You've got a right entrepreneurial hustler background before you got started in property. I know that I find that stuff fascinating. So can you kind of give us that bit of that backstory of what you've done before property and how it kind of transitioned into property a little bit?
Yeah, so I'll kind of take it all the way back to where a lot of our hustles start, or a lot of our first that dipping our toe into the working world and getting paid beyond pocket money was the paper rounds. And I took on a paper round as soon as I could, because those little brown envelopes of coins and notes went a long way when you're sort of 11, 12. But I think like my mum and dad will attest to the fact that I always had this idea that you can get paid, but then you've got to use your time as efficiently as possible. So even I think we had like the local Sainsbury's, and they had this machine where you could go and print a business card. So because I had the paper round, I printed this machine to say I was like a local distribution person. And I took these business cards around to all the pizza shops and the kebab shops, saying like, look, do you want to get your leaflets out there? I'm currently distributing to 500 people. This is how much it will cost to get it in. And it's all about those sort of efficiencies, being like, well, I'm already going to work. So if I can make it worth my time even more so, it made sense. I definitely think I always had that kind of entrepreneurial spirit.
So while you were doing your paper round, you're dishing out the leaflets for the
because I was there already. So it's just maximizing efficiencies, which is something that as I grew and going through education that you're taught to do, that you've got to work. You've got to work hard, but working smart sometimes can be even better.
And how old were you then?
So I was about 13 then, I think.
So it's been embedded in you. It's been quite the hustler kind of mentality has been quite ingrained deep.
Yeah, and I think there's some key concepts like in terms of working hard and working smart, and then also doing something that you like. So after that, I went to work, and my first job was in Primark. And that kind of just, I mean, like, you know, it was fun. It was one of those jobs where everyone there was young. It was kind of like being at a youth club. It was work, but it wasn't really work. And I, you know, enjoyed it. And then, you know, you're always looking to scale up. And then I next went to go and work at Phones for You. I don't know, did you have Phones for You in Scotland?
Yeah, aye.
Yeah.
Talking about Primark, mate, like Primark, however you pronounce it. Like, I've always thought it must be a nightmare working in there, because you know how they have all the stuff. It's just like,
do you know what? Yeah, it really like made me angry at, you know, some people that were either muscular or quite big, because that it go like from top to bottom with small, medium, large, extra large. And then the big people would come down after I've just spent like an hour folding all these t-shirts, would come and whoosh for their one at the bottom. And I'd just be like, and I'm quite small. I'm like 5'8", I'm slim, I weigh like 70 kg, something like, don't like these big people. But I think it was just jealousy that I always wanted to be 6 foot something, but I blame it on my Primark experience.
I've done that myself, mate, and then I felt really bad for the staff. I was like, look at the mess that I've made here. I should be like folding all these back up. Then
I know it. We have to like grinning teeth, be like, it's fine, don't worry, I'll do it.
Yeah.
What was, after the Phones for You then, what was your first business that you started in?
So my first business was it was a shisha business, so that the smoking pipes. And it was funny, I think sort of 2007, 2008, I'd gone on a holiday to Egypt, and it was my first time sort of seeing shisha and seeing the vibe, and it was like, oh, I like this. You know, I had a really good time there. I went back to Egypt sort of 5 or 6 times, but off the back of liking something, it's really good to have a passion for something, because it makes that work so much easier. Because when you're starting something out, you know, you're working crazy hours, your financial remuneration is so limited that, you know, you have to enjoy it. And it was also a case of like, there was, you know, I didn't have a lot of capital to go and just start a business. I couldn't go and open a shisha lounge and stuff like that. But what I did see was there was a gap in the market. That was not long after, a little bit while, but not long after the smoking ban in the UK. And like, you know, when you look at identifying a need, like smokers need to smoke. So all of the clubs and the bars and restaurants were creating these quite lavish outdoor smoking areas to cater to a need that their clientele had. Because at that point in time, you know, it was very new that you couldn't smoke inside. So it was like, well, I'm going to smoke somewhere. So there was these nice outdoor areas that have been created, but it were being underutilized. So I went to go and pitch to like bars and nightclubs to say, look, you know what? We can offer shisha in your area. And obviously, naturally, when you go and say, I want to do something, people say, okay, how much are you going to pay us? And it was a case of creating that value proposition that, you know, we're not going to pay you, but you can now market your bar or your club or your restaurant to say you have shisha. We'll charge a consumer directly. We do all the labor. It's no cost to you. It's a win-win. If it's busy, we get paid. If it's not, we don't get paid, but it doesn't cost you anything. And the markups on shisha at that time were ridiculous. Like they're like 1,000%.
Wow.
So, you know, it was good and made some good money doing that. Went from doing sort of my small local clubs to actually working in what at the time was the biggest club in the UK. It was called Proud 2 at the time in the O2 Arena in Greenwich. And yeah, I'm not going to get you wrong, I had some bad days because weather in the UK doesn't really serve the outdoor experience that well. I'm sure you can attest as being from Scotland, that even more so, that it's very sometime-ish, but on the good days, you know, it's making, you know, £500-600 a day, which at sort of 18, 19 is amazing money. Yeah. Went on from there to say, okay, how can we sort of upscale this? So again, it's just a case of we've got proof of concept to see that it works, and started to pitch to these festivals. So these are like these big overnight music festivals that are over a weekend. And what happens is people are camping there, and you've got literally like tens and thousands, sometimes 50,000 people that are staying on these sites. But after the music stops at 11 o'clock, there's nothing really happening. So we'd have these 24-hour shisha tents that we managed to get, and we pay a good premium, like a couple of £1,000 to have our stand at the events. But yeah, it was a risk, you know, invested the money that we made throughout the process of doing the pop-ups at the clubs. But yeah, those were making, you know, 4 figures like profit, like on a daily basis, like £4,000, because we were literally just turning it over. And in terms of staffing costs, can imagine at that age, and you're telling people, look, I'll give you a free ticket to V Festival, for example, but you got to come and do 5-6 hours work with me. And just like friends and family, and getting them to come down, and the experience, yeah, it was amazing. Had a really good time. And yeah, then took that capital And whilst I was at university, opened my own shisha like bar, like shisha slash cocktail bar while I was at university. And again, then sort of had a more of a stable premise and built that business out. And that was my first sort of proper business venture. And where I kind of realized that, you know, I went back to work for a little while after I graduated. I did like an economics degree. I went to work in finance for a little while, but a combination of like the hours and not liking public transport and a few other things just made me think that, you know what, this wasn't really for me, and I wanted to get back into being self-employed or a business owner.
I suppose you'd already got a taste of being entrepreneurial and a business owner, you know, before you even kind of went into the corporate world. So a quick taste of the corporate world probably showed you that, you know, this is definitely not for me.
Yeah, and it's about
how did the shisha stuff all come to an end then? Because that sounds like you were doing really well. Like, I mean, 1,000% markup and all that. And then did the market just change, or?
There was a few things. So you know, with commercial premises, generally you have a lease, which means that effectively it's not like owning a property, but it's like having a leasehold flat, for example. You have a right under the Leasehold Act. I can't remember what the year is, but you can basically extend your lease as long as it's within the act, and you can, you know, trade for as long as possible, and you can reinvest your profits to make your business as successful as profitable. My issue was because it was a council-owned property that had leased it to somebody else, who granted a lease to somebody else and had granted me a license. With a license, it meant effectively I was like somebody who was on it, similar to an AST, that at any point in time I could be given notice. So there were some issues with the premise that I had that meant that I couldn't reinvest to do everything I would have wanted to do, because it could have been super successful. But it meant that I couldn't reinvest for that fixed premise. Also, shisha, you know, it is unhealthy. So, you know, naturally, you know, councils are not that proactive when it comes to wanting them operating in their area that much. So in terms of trying to find a secondary premise, it was quite difficult. And I was kind of like at this sticking point where I could see the potential with the business, but I couldn't really grow it the way I wanted because I couldn't find an alternate premise. I couldn't invest in a business that I already had. And also I was doing like ridiculous hours because the trading hours are sort of 2, 3 in the afternoon up until 11, 12 at night. And then you've got to close up and finish up. And I'm not getting home until 2 in the morning. I still had university in the mornings myself. My attendance was probably about 20, 25%. I was just trying to sort of balance. You know, they say you got too many spinning plates and I had to focus. And I do think after like doing those really long hours and not being able to scale the business in a way in which I wanted, that I knew it would kind of create that long-term wealth, just made me think, okay, what else can I do? And I had like an interest in property. I had other people kind of that I'd seen around me, like sort of slightly maybe a generation older, that I'd seen being successful in property. So at that point in time, I was already shadowing them. I was hanging around on building sites like a bad smell, just trying to sort of work out what's going on. Because when you see stuff and you see little indicators, and they might not, you know, they're not that important, like the fact that somebody drives a nice car, but you know, you see stuff and you're like, okay, like I see what you're doing over there. Like, kind of how did you do that? You want to get involved in the
success leaves clues, so you want to be around those people to kind of try and piggyback on it. So you didn't go about the you know, the most fucking annoying thing, and you'll probably find that now, you know, being experiences when people kind of reach out and just want to take you for a coffee and pick your brains. You didn't go down that route. You went and actually volunteered on site, didn't you?
Yeah, it's funny. My DMs, people always message me saying, "Can I take you for a coffee?" I say, "I don't like coffee. I'm like a child. I don't like hot drinks. I think like, I'm now trying to be more healthy and stop drinking fizzy drinks. But like, I'm a fizzy drink connoisseur."
That's pretty bad, your response. Don't like
what is that you're drinking right now, by the way?
This now is good old Robinson's are with water. So it's I don't like drinking water, so it's like my childish way of trying to get my 2 liters of water in. Like my actual funnily, like a little random anecdote, like my most popular shisha flavor while having a bar at the Buddha Lounge was almost like a Scottish, you know, connection in it. Was that a shisha that tastes like iron brew.
Oh, nice.
So we definitely cater to the Scots over at the Buddha Lounge.
Was this the transitional period then with the shisha bar giving you the capital to kind of think about starting in property? What was the kind of plan then? What was the thought process to get educated, to get more knowledge on it, to venture into it?
So like in terms of my background, something else is that like I'm quite heavily dyslexic, and so like the way in which I learn, I would describe myself. You know, you say you've got different type of learners, and I'm very much like an active learner. Like if I was to go and do a course, or even to a degree, like listening to podcasts, sometimes it doesn't really transcend into like me learning. So I've really got to be out there. So that's why I was saying just going down to these sites, and like fortunately having like a network of people that I can look, let me go down, let me go and see what you're up to. And I think there's this weird paradox where, at a young age, what you have is time, and you can use that as an offering to kind of create a value proposition. Because the weird thing is, as we get more successful, we have less time. And as you get really successful, what you aim is to have more time. But you're at that weird transition. So when you're younger and don't have like the overheads and are able to offer your time, it's a really good way to offer a value proposition to somebody to say, look, this is how I can help you. So I started off just sort of like being like, look, can I just see what's going on? And then it would be a case of, look, do you need anything? Like, do you want me to go and get the materials? Do you want me to do this? Do you need me to meet anybody? So we're just offering my time to these existing property developers.
Which is value to someone that's successful that doesn't have that bit of time. If someone young's kind of willing to kind of lend that little bit of hand and do it for no cost, of course you're going to be willing to then give that bit of value back, aren't you?
So then I was doing that for a little while, and then this was all simultaneous to doing the shisha stuff and being at university. So I was like literally like, but I'd always been used to like, I never really saw that I was like, I felt uncomfortable when I had free time. Like it just felt really weird because like I said, like from 12, like sort of 12 paper round, 15 primark, X phones for you, and was always in education at the same time. Like I'd always been super busy. So like that was fine for me. But I offered that time, and first like I was just helping and saying, like what can I do? And then it was a case of I actually became, you make yourself invaluable. So you make yourself like to the point where people now need you. So the people that I was helping got so used to me, like just being able to call me to say, oh, can you grab this? Oh, we've got a surveyor coming down. Can you meet them? And you're learning every time you're doing it, because you're meeting people, you're finding out, you're asking questions, you're saying like, well, what's this? Why is that a damp course? What's the DPC level? What's X, Y, or Z? And you learn so much. And particularly when you're learning on somebody else's dime, on the mistakes that they're making, it's a lot safer at that stage in your journey. So the next thing I had was with those same people, they had another project, and one of the two brothers relocated to America. So they had a lot less time. So I said, look, you know what? I'm gonna like kind of put a proposition to say, look, I'm happy to do everything I'm doing, like, and I'll kind of be a project manager, but I don't want to be, because they were kind of saying, oh, they want to start paying me. I was like, I don't want to be paid, but I want a percent off the back end of the success of the deal.
Right.
So not the GDV, but of the actual net profit.
That's quite an interesting proposition as well. Probably for you as a young guy as well, looking at that and saying, well, I don't want to trade my time for money. I'll happily do it on performance, and which could have been a risky, or it could go. It could have
it could have been, and but like fortunately, I still had the income from the shisha business, which is a great position to be in. And I think that's another thing when people talk about like, I want to get into property, or I want to start any business, but I want to leave my job straight away. And it's like, well, leaving your job, like your job is your safety net that can allow you to take further risks. So sometimes you've got to find that balance. And even if you want to leave your job or don't, because some people that work full time and still have a great property career, it's not that you have to leave it. But if you do want to leave your job and want to be full time or want to be self-employed, like looking at really doing, sort of some cash flow forecasting and some analysis on your own personal position to understand when it is that it's good for you to do that. So I was able to do that. And fortunately, that project was, I'll be honest, I didn't do anything amazing to make the project really successful, but it would just happen to be that we were in an upwards market, a boom market, prices were going up, they expected profits, well outstripped what they were going to be. So I got, good personal remuneration for my involvement in that project.
Nice. And I bet it was a huge learning curve as well.
Yeah, no, I learned. So because even the type of project that was, I didn't go and embark on that project, like a project for myself like that for another 3 or 4 years.
Yeah. So what kind of project was it? Was it a flat conversion?
Yeah, it was a flat conversion. Yeah, it was a flat conversion where it had a basement. Right. So full on basement, so that all of the tanking, just like, the pumps, like loads of different stuff, that learning about those at that stage which was like you mentioned, invaluable.
I think this is really good for like young people to listen to, because like you say, you know, too many people just want to fast forward to the end goal, and not enough people want to just do this sort of stuff. And this is great learning as well. So if somebody's interested to maybe doing that, you know, reaching out to a few developers, then if they get that opportunity to go and work on site, how do you sort of prove your worth there and not just become like a pest, you know? Because if you're just there and you're just like lingering about and just like getting in the way, then it could be quite annoying to somebody. But obviously, like, you proved that you were valuable to these guys and they took you on, they realized your worth. So is there anything specifically that you did off your own back or anything like that?
I think there's loads of different, like, you know, we always like to get into property, like, you know, there's loads of different factors or things that you need or to get into any type of business. But you've got to look at yourself personally and can see what you can offer, because what I say to people is you're really trying to create that value proposition. Like the people within my team now, like the one guy, like a guy called Gio, like he's amazing that works with me. He kind of like, and loads of people have hit me up saying, oh, can I kind of shadow you, or can I X? And it's always like, I just don't physically have the time at the moment, and my days are really disjointed. But what he was he was great at social media. So he started saying, look, I can help you manage your social media. I can make content for you. Like and not just I can make content. Here's 10 posts that I've made. What do you think of them? Like, I've watched this many of your podcasts. I've made you some shorts. I've done X, Y, or Z. And I think really that's the important part in terms of you need to see how you can add value, because with any business proposition, you're looking for those pressure points of what somebody needs. If you're trying to do rent to rent and you're trying to work with a landlord, you need to understand that they're the landlord that wants you to look after their property like it's your baby. Are they the landlord that just wants complete stress-free hands-off management? Are they the landlord that, you know, maybe needs something else, maybe needs the property's in a bad state and you can help to project manage your refurbishment? But really understanding a proposition that's going to work for you in terms of you get what you want out of the engagement in a relationship, but at the same time, the person who you're pitching it to, that they're getting some good value as well.
Yeah, that's great advice, mate. Are you sure you just didn't turn up on site with the iron brew shisha, and then after that they were hooked? They kept asking you back.
You know, I feel like you know, a little bribe. You know, sometimes turning up with a bit of like, anybody fancy a pizza? I'm going anyway. Like, you know, it's always a bonus.
That's phenomenal advice. It really is, actually, for your own guy starting out like you. That's the Nick. Talk us through your first project then. So you've kind of got experience. What did your first project look like?
Wait a minute. Let's just say that, like, out and out, you're like a proper like developer, right? Focused on property development in London, right?
Mm-hmm.
I think that's important.
Yeah. So I'm like, I think there's always like you know, a lot of people are property investors, but a developer, you know, even at the most like the smallest or the starter stage, is somebody who's not just investing in property, but somebody who has a strategy to add value, because you need to develop an asset. You need to be making it worth more to really put yourself in that classification. I don't think you need to be doing ground up builds. I don't think you have to do conversions, but you have to be, you know, you don't even have to do structural stuff, but you have to have a strategy that adds value to kind of class yourself as a developer, as opposed to somebody who's an investor who's looking more at just yield and building a portfolio. So I would definitely put myself in a developer category.
Yeah, no, that's good to clear that up. So your first deal, what did that look like?
First deal, yes. At the time I mentioned, like, I'm self-employed. I've still been self-employed, like, with a sufficient income for less than 2 years. So lending, I don't own a residential property, so lending's really hard. You know, so I'm doing what I would always recommend people do, whether, like, even before I was ready to do deals, I would do what I call dry runs, in the same way you do it with skiing. Like, effectively, what that means is, if you're looking to go to auction, do your comparison on lots, whether or not you've got the money to buy them now or not. Do your comps, set yourself like a max bid, see what you would have gone up to, and then see what it actually sells for. Because at that point in time, it's a really good way to test where your skill set is for your ability to appraise a deal. Then also looking at maybe down the line, see what maybe they go to remarket that property for. If you are fortunate enough that it does go on the open market, so you can have a look to see kind of where your numbers are at. And if you're like way over, then potentially you've maybe underestimated your build costs, or you've overestimated what the property would sell for and its revalue on the GDVs of your project. So you maybe need to go back to the drawing board and do those things again. But if you're finding, what your max bid at was pretty close, or it went for slightly under, then that maybe you're in the right ballpark, that you can feel confident that you're in a position to appraise deals. And I think that's a really important starting point. Like, before you jump into property, you need to be able to appraise a deal and do your numbers, because if you don't, you could do an amazing project. It could look great. You could have a great build team, but you don't make any money because you bought at the wrong price. And that's another key point for anybody. That's the best thing that I've ever learned in property, is that you don't make your money when you sell, you make it when you buy.
It's got to be the most valuable skill set in property. And I completely agree with that. If you know how to find a deal, like appraise it, negotiate it, buy it at the right price, then that's to me, that's where the money then becomes the easy part to get.
That's literally it. Like, we put together this series recently called Property Insiders. It's on YouTube, and it basically outlines 5 different people's property journeys. And there's a chap from Birmingham called Anthony Laville, and he's saying people always say, "Oh, I bet it was mum and dad's money. I bet it was somebody else. This, da, 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 da." And it's whoever's money is, what you need to understand, getting, and he put it so well. He said, getting the money isn't necessarily the hard part. Getting to the point where you need the money is the hard part. Once you've got that deal, if you've got a great deal, you will find the money will come, whether it's going to networking events, using social media, reaching out to your immediate circle. If you've got that deal and know how to, confident enough to now to explain it, you've done your due diligence, you'll find that whether or not it's an investor that wants equity, or that, is a debt, is a debt investor, you'll find a way to structure that deal if you can, find and source and make sure you can do your comps on a really good deal.
Yeah, I absolutely agree. And is that how you done your first one then? Did you practice for a good few times, umpteen times first before?
Yeah. So I was literally from the beginning, from conception, I was trying to work out would I buy this? Does that make sense? Going to, I think also leaning on your circle, because as I got older, a lot of my friends started in real estate and started working in estate agents, and they progressed and gone to manager roles or assistant manager roles. So you can lean on your immediate circle to look, what do you think the end values of this is? So I think that's also another key thing, that, using the people that to maximize your potential in doing that. So my first deal, I mentioned I couldn't get conventional lending. I couldn't go and get a buy to let, didn't have the affordability to get a residential mortgage. I maybe could have got a buy to let, but it would have been difficult, and it was harder to find a deal. So I found a property at auction. I'd gone through the auction pack, and it was a housing association sale. So, auctions, you have different types of sellers. You have duress sellers, you have people that are maybe property traders that put stuff in and out. You've got some absolute rubbish where people are just trying to get rid of it, it's got all sorts of problems. And then you've got the institutional sellers, like housing associations, who that's how they get rid of their, their surplus stock. So they're not always completely safe, but generally, because it's an organization have a practiced way of disposing of stock, they tend to not have as many nasties as some things that can come up in auction. So I was focusing on that type, and I think that's another key part, finding a niche, finding something that you're looking at. Because if you're trying to look at everything and you don't have the experience to appraise legal packs, then you could spend either your time or your money and get bogged down in that. So found a deal like that, spoke to my broker, and managed to arrange my MIP or my finance, so having was able to get a bridging loan. And it was funny, he was kind of speaking to me, and I would have been 23 maybe at the time, and he was like, "A bridging loan for your first property? Are you sure?" It's a bit of he described it as a baptism of fire. And I always remember that. But yeah, it was for property prices in London. It's cheap for London, but comparatively, it's an expensive property. If you look at kind of UK averages, it was just over £200,000 for a 1-bedroom flat in Southeast London, Sydenham, SE26. Needed a full refurb, but my strategy then was, look, it needed a full refurb, and potentially there was some profit in it by just refurbishing it. But it was looking at, in property, a lot of the time, you make your money from what other people have missed. So we looked at it and we said, okay, we approached the freeholder for a license to alter agreement and moved. It had a large kitchen, so made that large kitchen an additional bedroom and moved the kitchen into the living room to make like an open plan kitchen living room, changing it from a 1-bedroom to a 2-bedroom. And the uplift, like on a 1-bed to a 2-bed, when it's of a decent size, is really significant. So that's where the majority of the profits were. I think the refurb was about 25,000. We then got stamp duty. We've obviously got like the finance costs, the license to alter application and professional fees. But I think circle all in, we looked at maybe anywhere between sort of just over £40,000 profit from that deal.
And then you sell it straight on open market once it was completed?
Yeah, literally straight. So in and out, like, probably was in and out of that deal in around, I'd say 7 to 8 months.
Yeah.
Which is kind of like, which then a lot of the stuff that happened on that deal. So the idea of the 1 to 2 bedroom conversion was like, okay, this can work. So then focused on looking at similar types of properties. In terms of the lead time of being like, being in and out of a deal in 7 to 8 months was sort of perfect, because I think at a 70% loan to value, we're looking at putting in about £80,000 like by the time they gave us our net advance, which ended up at about 62%.
Was that your own cash you put into it, or was that private investors funds that you put into
it? To start with, like, I was fortunate enough with my previous businesses and my involvement in other deals that have my own cash, and I think that's something where my journey has been slightly different. All of my first deals were my own money. It wasn't until sort of 3 or 4 years later that I started to look at like private investment and private equity to do deals.
Did you find that was easier to do not because you had the cash sitting in, because you wanted to build up the credibility and that experience to then go to a private investor and say, I'm not going to borrow your 80 grand because I've never really done this before, as much as I've done my due diligence, my numbers are broken down here, and I know what I'll sell it for, I know my build out costs. Was it that kind of confidence and just I'll do a few myself first to make sure that...
I think everybody has a different attitude towards like risk and integrity, and technically, like when you're dealing with somebody else's money, they know there's an element of risk. Like you could use the money. It's an investment. Any investment has risk attached. But for me, like from an integrity perspective, if somebody wants to be in this industry, in this game for a long time, I never wanted to lose anybody else's money. I never wanted to risk anybody else's money until, I was confident that I knew what I was doing. I feel even now, like depending on the type of deal, like I've been like sort of fast forward to like maybe 4 or 5 years down the line, I was offered £2 or £3 million worth of like investment. And I was like, do you know what? Like the type of projects I have to take on to make the returns that you want and I want, I'm not ready to do. So I turned it down. I think it's obviously some people have gone the complete other way and they've done amazing, but it's really all about your attitude towards risk. And you shouldn't like have that kind of like sort of shiny penny syndrome bar because someone offers you money, it means you have to take it. You've got to kind of gauge your own personal attitudes towards risk when doing any deal. I
can completely relate to that as well. As someone that uses private investors funding, I would much prefer to lose my own money than private investors funding, just because your integrity stand, like you say, you're going to be in this game for a long time. You don't want to lose someone's money or risk it. It just seems like, if it was a project that was unsure, I'd much prefer to put my own money into it and
with that as well, it meant you know your attitude towards risk. You're not having to explain stuff. You can move a lot quicker. You can make a snap. You can see a property online in the morning and offer it at 2 hours later and not be having to go out. And sometimes that ability to act quickly can make the deal, is what makes the deal, because you secured it straight away and you were able to move faster than anybody else who was having to wait to get a second opinion and to get the funds confirmed and to do their high net worth checks and all this other stuff that are involved in investors.
It's definitely a mixture of that as well. But if you've got something a bit bespoke or unique, like even just like your 1 to 2 bedroom conversion, you're going to have to explain to an investor, here's the reason why I'm not going to do any structural changes. I'm going to move the kitchen into this lounge area because it's big enough, and that's going to give me the second bedroom. To kind of go over that process of explaining the development to them, that does take time, and you've got to get them on side to buy into it. Whereas if you can move with your own money, you go, I know I can do it, I'm confident on doing it, let's just push forward and get it done. And then at least going forward, you can then take that example to the investor next time and say, here's what I've done before.
And it's almost like the reality is that once you've got a track record and got credibility, you've got like a credit, like you've got credit with your potential investors, like your credit score is high. So I'm saying, look, here's the deal. I need £200,000 and your return is 8%. Like the reality is that, I can walk you through the deal if you really want, but these are the numbers, and it's about whether or not the numbers stack for you, because the deal is my problem, and that's where my expertise come in. Like I don't need.
You don't need to get bogged down the deal, and I'm very much like that with private investors as well. You don't need to know the deal. You can be giving me money for anything as long as your track record and experience stands up. They're investing in for a return. That's all they really need to know, the return. They don't need to be. I think when a private investor starts looking in and digging into the details of the deal, then they're probably not the right private investor for you. You've probably not qualified them enough with your track record and experience to just go, yeah, okay, here's the money. I'm happy with my return.
Yeah.
So I was going to ask you, like, I heard you talking about, like in another podcast, there's this kind of like misconception that once you've been doing this property stuff for a long time, that once you get to a certain level that you no longer, have to trawl on Rightmove and speak to agents and deals are just coming to you. I mean, you've been going 8 years now. You've done 35 plus projects. I heard you're still getting deals on Rightmove, aren't you? Still putting in the kind of blood, sweat and tears trawling through listings and stuff. So, I think a lot of people say, there's no deals out there. You need to be like direct to vendor and all the rest of it. But you're still finding stuff on Rightmove, right?
Yeah, no, there's still deals. There's definitely still deals. I've never said like it's one size fits all and I have to go, like I only use sources, or I only buy at auction, or I only buy in the open market, or direct to vendor. It's just the deal is what speaks. Like if the deal makes sense, like I'm happy to go for that deal. But a lot of the time, you've got the best deals are the ones that you find and look after yourself. Like one of my most recent deals was a freehold purchase of a property again in Southwest London, and it was advertised as a 4-bedroom flat. But looking into it, I went in and I saw, you know what, like I went on the land registry because it was being sold with the freehold as well. But actually this 4-bedroom flat has actually been registered as 2 separate flats for the last 30 years. So it didn't require like a conversion. You could go and do a straightforward refurb, put it back to what it is as 2 flats.
Nice.
And the uplift was ridiculous. But that kind of came from, mismarketing from the agents, or an agent maybe not doing their own due diligence. So sometimes it's that case of seeing what other people have missed within any like individual opportunity. So I love I love stuff with structural issues or legal issues, or stuff where maybe it's an agent like selling a commercial property that generally does residential, or vice versa. Because a lot of the time you can kind of create the deal yourself.
Talk us through that, Leo, because I think you've kind of hit an important point there. I think starting out, you take the professional's opinion as gospel. So this 4-bedroom flat's a 4-bedroom flat, but you're digging that flat.
It'd been on the market, and I use the example like this 4-bedroom flat had been on the market for 6 months. It was a big flat in a good area, £600,000 they wanted for it. Ended up putting in an offer, having it accepted at 550, 550,000. Then got downvalued by the surveyors, because it was at a point in time where they were downvaluing everything, downvalued it to like 500, and we met in the middle, and I think I bought it for like 520 in the end. But I knew what could be done. But I knew that although they were selling it as a 4-bedroom flat, this was technically 2 flats. I didn't have to go for planning, just building refurb. There was a bit of works to be done. But yeah.
So kind of two simple cosmetic refurbs in each of the flat and then sell them individually.
2 cosmetic refurbs. There was a bit more because the roof kind of had to like fix a load of issues within the roof and a load of other stuff. Like we got new, because of the way it had been used, got like new water supplies, and had to did the front driveway, did a loads of cosmetic stuff. Because when you're trying to hit the top end, where you're trying to hit ceiling prices, you need to, everything. You got to think about that curb appeal. When people walk up to the building and you're putting a price tag on a 2-bedroom flat of like £450,000, they need to love that flat and want to buy it. Ended up, doing all the works, probably spent better part of like £100,000 doing everything that we did. So that kind of takes you to 620. Then got stamp duty, finance costs, still under the 700 mark. Marketed both of the flats for 450. Had offers of 440 on both of them, and then also sold the garden sold the garden to the ground floor flat to own the entirety of the garden. That's the great thing about having a freehold. You can decide how you want to chop up and amend your leases accordingly.
Did you keep the freehold, or did you sell it on with the flats?
Well, I've still got it. I'm going to keep the freehold. I've issued 3 brand new 99-year leases. So like, going forward, sort of 10, 15 years time, people be knocking on your door saying, hi, Mr. X, I want to pay you 10, 15, 20,000 pounds.
See, we don't have that in Scotland. Like everything's like freehold in Scotland, so it's a little bit different.
Okay.
But yeah, so like, but it's interesting the different systems. But that's cool. So, what do you think your main attributes are then in terms of like your success? What would you say you're best at? Is it knowing where to add the value, finding the deal? Like what mixture?
My best, because even like I've been doing this for a while, and a lot of people are like, oh, why don't you do like more new build stuff, or why don't you go into bigger projects? But my main attribute is finding a deal. Like that deal there is gonna make up like 6 figures, probably upwards of £200,000. The capital to do the deal is less than £300,000. So that's like a 66% return on investment. So why would I go and do a big ground up at 30% and have to still go through planning and go through all this other stuff and development finance and having to have a surveyor come out and having to have way more capital tied in, having to have a way longer term as well, because also when you annualize it, it's making even more money because it's even more efficient. So I definitely say my main attribute is the ability to actually find a deal. Like I find the best deals.
So you're no good with a paintbrush then, no?
No, so at the beginning, like, I used to want to try things. Like I tried a few different things. Like I tried my hand at some painting and some plastering and some tiling. Like I can do little bits of it all. But it's efficiencies. Like I'm no way near as good as the skilled professionals. Like, because all of these trades, whether it's your sparkies, I tried to do something, I was trying to do some plumbing. I was trying to reconnect a boiler and end up electrocuting myself. I was like, I'm not doing this anymore. But like, these people have amazing skills and they're really good at, and they've taken time. And I think it's almost, when we try and do little bits of everything, it's almost disrespecting the crafts of people that have taken time to educate themselves and become experts in their field.
Yeah. Do you know what? It's something that took me a while to kind of shake off as well, because like you've just explained your skill in spotting that deal, that the flats were actually 2 separate flats. Now that's a skill set you have that's probably added, I don't know, I mean, you got 80 grand off the asking price of the flat. So there's 80 grand you've saved there, plus the profit you're going to end up making the deal. That's your skill set. I was always pretty bad for trying to kind of go on and project manage the renovation for flip projects and do bits and pieces yourself to pull the cost down. When you actually realised that your skill set was actually finding the deal and managing it, and it was much a more valuable skill. It was like, don't fucking. I
don't think there's anything wrong in, if you're good at project managing, or even if you are, like, don't get me wrong, like if you're an amazing tiler, then maybe. But however, the thing is that you have to look at, if you're going to pay, a good tiler £200 a day, for example. But what you get, if you do the tiling yourself, you could save yourself £1,000. But if you're way better at finding deals, all you've got to find is one deal over that 5 days, or maybe do your accounts or do something in terms of your own personal growth, and that pays it back. So you can't do everything. If you try and do everything, then your business only has the potential of you. But if you take on like the right people in the right places to do the right things, then you can 5x or 10x the potential success of your own business.
Absolutely. Yeah. Have you got your own guys work for you then full time, or do you just kind of subcontract guys out?
Yeah, both. So I've got guys that have worked for me for full time, and then I've got like independent teams that they have their own companies, but they pretty much just do my work.
Yeah.
So I try and like, even outside of what I'm doing, even if I've got like a down period where my pipeline's not that strong, or I'm waiting for planning, then what we'll do is in-house we'll take on generally, I try and not do owner-occupied jobs because they're a lot more bespoke, but generally try and we'll do the refurbs for so we just did one for another developer and do like their flat refurbs or their, just in and out projects where it's quite quick, but just to keep everybody busy.
Keep the guys busy and keep them
working.
When
you've got good people working for you, if you don't keep them busy, like everybody's got to put food on the table, everybody's got bills to pay. So if you don't keep them busy, they're going to go somewhere else. And then by the time you want them back, their price might have gone up. They might not be available for another 2 months. And I think it's just the case. It's a bit of give and take. Sometimes I do these projects and I don't make any money out of them, but it's a case of, look, I know that, there's more value in keeping them busy than there is in trying to squeeze the project to make money.
That's a great point. If there was one bit of advice that you could give our listeners to, have successful relationships with builders and tradesmen, like, is there anything that you would say to try and keep a good relationship with these guys?
Yeah, I'd say like bring food occasionally. Like Fridays, bring a little food, whether it's a little Chinese, or Indian, a pizza, just bring the food. But I think it's, people are working hard, we're working in cold conditions. It's just, there's a balance. Like there's also an understanding of understanding the skill set and of the people that you're working with. Because if you come from a corporate world and are trying to email your builders, and it's maybe not a realistic way of communication. So building up a way in which that works for you. I think one of the key points and the most important points is creating accountability from day one. So even if your builder is a good friend of yours, always having that scope of work and that contracts to refer back to be like, look, this is what we agreed. Because then it's not a case of he said, she said, and you end up falling out over, you get to the end of a project and they're like, oh, I didn't say I was going to do the landscaping. Like, yeah, but I thought it was assumed and X, Y, or Z. And then you fall out over £1,000 for a builder that saved you, 5 figures, like, on the project before. So I think definitely like having that accountability from day one in terms of always using contracts and having them, you preparing them yourself. So even the scope of works, you prepare them. So like for me, I always prepare them and I'll make them very clear. Like all of this is included at the bottom in red, underlined, in bold. It says, if it's not in this contract, it's deemed as not included. So it's very clear for both parties.
Mm-hmm. I think that's really good. Like, and what you say about the accountability, too many people are so quick to become like victims, aren't they? When really they should make themselves in control of it. Like you say, have everything written down there so there's no questions asked. Do you know what I mean? It's really good.
Yeah. Too many people do that, like, where they're like, oh, the builder did this or that or whatever. But when you see the steps that led up to the falling out, you're like, well, I could see this happening. I could see it from a mile off because you weren't tracking the payments. You were calling them every day to the point that they weren't really updating you properly. So working out a relationship that works, are you going to do a weekly update? So it's just very straightforward. And this is what it is standardized, that they don't have to think, I've got to call you every 5 minutes. Are you going to have a float with the builders for the unforeseen? Are you going to say that, okay, look, small jobs, like maybe up to a budget of 100, 250 pounds, if they incur and they're added to the cost, you can just go ahead and do them. So we don't have it where we have to stop and down tools, because over a minuscule amount of money, that's gonna, if you've got bridging on the property, that back and forth could cost you more money in finance than it costs you in just paying for the fact that, you know what, this wall fell down that we didn't expect because it was Latham plaster and we've got to redo it. Just having kind of a bit of more of a working relationship with your contractors.
Good points. So what's the future for Property by Kazy then? What's the future hold? What do you think?
Well, I kind of said, like there's a lot of different, like there's loads of different things that I'm working on. I said pipeline for sort of 2022 is really important. So 2021, I just said I'm going to acquire assets and work out how I'm going to pay for the build cost later. So bought like five properties, all sort of around the same purchase price, all around the sort of £600,000 mark. 2 of them are conversions, 2 of them are going to be luxury homes. 1 of them is going to be a ground up new build, so a demolition of a bungalow and conversion. So, and then a few other projects we've got in the pipelines. And I thought that was really important in terms of having that strong pipeline, because planning is taking so long at the moment. You want stuff that you can do now, stuff that is going to come up in 6 months, 12 months, and continue in that vein. Like I would like to go into, bigger projects in terms of, 10, 20, 30 units. But the thing is, then you sort of have to deal with your Section 106 agreements and affordable housing. And for me, it's a percentage game. We don't have unlimited money, like capital is finite. So I just want to continue using my capital as efficiently as possible. I think off the back of having all these projects, I'm actually going to start working with investors again. So I'm like sort of targeting, I just want to be working with a select group of investors. So I've got a couple, generally are like, either athletes, professional athletes, or in the music space, so people that have a lot of disposable capital that want to get into larger projects. And I'll be working with them as a JV partner. So they'll come on board and kind of be working on independent projects of each investor and get some of those across the line. And there's a few things from just more of a sort of social responsibility elements. So I think, financial literacy at a young age is really important. Like a lot of us didn't have that. A lot of us sort of picked that up down the line and learned it from friends and learned it from YouTube. But, I think now even more so with this generation kind of entrepreneur where loads of people are running their own businesses and people are starting businesses from Instagram and TikTok and Facebook, that, you know, kind of creating that financial literacy at a younger age is important. So I've just started sponsoring one of my local football teams who do really well. And we're going to kind of integrate like football and finance, because some of the boys and girls that play there have been signed for like, you know, top Premier League clubs. And they need to understand how to use their money effectively. But for those that maybe unfortunately don't make it, they need to understand also the importance of managing their money and take those skill sets to further their own careers in whichever vocation they proceed with.
Yeah, I love that, mate. I completely agree. You can't manage £1,000, you won't be able to manage £1 million. It's just going to be the same.
That's really cool, mate. And like, I love what you're doing with the YouTube stuff and all that. And, you know, 50,000 followers on Instagram, you're building a good brand there. I mean, you even got invited along to Samuel Leeds' house to do an interview with Samuel Leeds, mate. So I watched that last night, and I want to ask you before you leave about that. You know, I saw you asking the questions that everybody asks, and it was like, you did good, because it must have been difficult, because when you go into the questions about, you know, about how people perceive property educators and all the bad press and stuff, it was like you asked the question, then you kind of had to rein it in a little bit because he was like on edge, and then there was a little bit of awkwardness and all that. But like, how did you find like Samuel Leeds? Did you find him authentic? Like, you know,
like as a person, like, you know, he came across very personable. Like anybody that invites you into their own home, like you kind of have to respect that to invite you into their own home. I think I'm always somebody that, like, you know, if somebody tells me, oh, I don't like this person, I always think, well, I want to make my own mind up. I've always been, you know, very like strong-minded, that I don't just kind of go for a herd mentality. I was like, let me like make up my own opinions. And I'm still kind of, you know, on the fence in regards to some of the practices, but at the same time, I've never been on one of his courses. Yeah. So I can't speak from first-hand experience. Like as a person, he came across nice. In terms of the courses and the hard selling, I've not been there in person. I think it's very 50-50, and there was a real like polarity in the comments. Like some people love it and hate it, and some people, you know, very Marmite. Some people are like, look, I think it's horrible. I don't like his practices at all. And what I would say is, you know, like, there's two things. Like, one is that the initial course, you know, the initial seminars and stuff are free, so people can make up their own minds in regards to what they think about it. I think in property education, my more overriding point is I would love there to be more accreditation in property courses, because the reason you can go to university and you can literally come out of university in £50,000 worth of debt, like nobody can turn around and say, oh, well, you know, it wasn't like the course wasn't good because the course is accredited. There's somebody else that says, look, this is a course that is delivered a course of a certain standard, and it's your job to then go and take that education and to make it worth your while.
Yeah.
My main concern with property courses is, you know, dream selling. Like, and that's what I don't like, because obviously stuff that's sold as a get rich quick scheme, you know, kind of almost preys on those that are vulnerable or want to make money. And there's accountability on both sides. There's a load of accountability on somebody selling a course that's promising something that they can't necessarily guarantee or deliver. And there's accountability alongside of the people who are taking a course and expecting a course to change, you know, your personal circumstances overnight. So I think on both sides, if you are doing any courses, you need to understand that, you know, you need to put in the work rate to get out what the courses is suggesting. And for those that are selling courses, there shouldn't be any guarantees. It should be always sold as, look, like, this is, I'm going to teach you this, and this is an opportunity to learn something. This is your potential, what you could make from it. But I think for those looking at education, it's not one size fits all. So from my understanding, you know, like Samuel Leeds courses are a lot more kind of Wolf of Wall Street style, motivational, to get like that fire in your belly to go out there and be like, I can do this. Whereas maybe somebody needs a lot more hand-holding, and that person needs a lot more hand-holding and needs the numbers and these details. They may find a course from, you know, Stephanie Taylor, or depending on what industry, you know, whatever industry they're in, if it's rent to rent or something else. But I think if you are going to part with money, you should make sure the educator fits your learning style.
Yeah, that's a great way to sum it up.
That's perfectly summed up. Really good to get your view on that. So, like, let's just wrap it up, mate. It's been a great interview. Thanks very much for taking the time. Where can people reach you?
So you can find me, primarily Instagram, property by Kazy, all one word, same as the YouTube. YouTube, we're going to start smashing the content. I think we put out like 10 videos in the last month. We're really trying to build that YouTube following to make sure that people can get as much benefit. Like we don't have any courses or anything we're selling at the moment. We've recently put together an amazing documentary of 5 people's experiences in property. It's called Property Insiders, and it's on the Property in 12 YouTube if you want to check that out. Again, same thing on LinkedIn and Facebook, but primarily the Instagram. So yeah, check us out there. Let us know what you think.
Right, mate. Thank you very much for joining us. I appreciate it.
Take care.
Thanks so much, buddy. Cheers. So I hope you enjoyed the interview there with Kazeem. Go and follow him on social media. He's got a YouTube channel as well. Just to let you guys know, we are back with the networking events, hopefully, all going to plan with the government guidelines and stuff like that, and the venues allow us. We're hopefully going to be back on February the 2nd. So that's Wednesday, February the 2nd, across all venues in Scotland, Aberdeen, Dundee, Edinburgh, and Glasgow. Stephen?
Yep, we've got some fantastic guests lined up, guest speakers, sharing our deal. So it's going to be a really good event. We've been getting great feedback on them so far.
Where can people buy tickets?
They can get them on Eventbrite, and even your Kazy was saying there as well Kazeem was saying that at the end of the interview that he was more than willing to come up to Scotland and participate in these events as well. So it's nice that the podcast attracting guests from further afield to come up and join us.
As long as we get him some Iron Brew and some Turk's caramel wafers, he'll be up here.
Absolutely. Thanks for listening, guys.
Thanks, guys. Bye for now.